There is some more information coming out of the CAG report on the Rafale deal. We'll get our correspondent Rituparna, who is actually sending all this on the phone line right now. The Indian Air Force, instead of defining functional needs, gave technical specifications. So this is some detail coming in. Lenders, and I quote, lenders could not fully meet air staff qualitative requirement. That is point number 2. Objectivity, consistency during technology evaluation was consequently affected. Okay, and there is, I think, more. So that's the big headline, of course, which you'll see splashed all over, which is that the Rafale deal was about 3% cheaper than the one which the UPA was negotiating. The basic flyaway aircraft was bought at the same price as the 2007 UPA aircraft. Is the other bit which is coming in, but the other bit is all technical and it would require some expert commentary. Which we will get through the course of the day. But let's also quickly get Rituparna on. If we have Rituparna, I'd like to go across to him. Okay, I don't think we have him yet. We will have him shortly, and we'll try and go across in a bit. Let's get in Vaibhav Sanghavi in the meanwhile, co-CEO of Avendus Capital, who's now joining in for some thoughts on the market. Vaibhav, thank you for your time. It's essentially been a similar market now for the last couple of months, which is broader markets, no interest, liquidity, flight of liquidity, but the bigger the stocks, more people flock to them, and hence the Nifty stays where it is. What's going on? What's top of mind right now, Vaibhav, according to you?
Sure. So that's an interesting observation, and we have been maintaining that 2019 as a calendar year would be tale of two halves. Where in the first half, it will be largely, disinterest, or even in that, it will be extremely turbulent, volatile, purely because the first 3 months of calendar year 2019 have more to do with the global reasons, and the next 3 months would be more to do with the local reasons, starting from elections. So we do feel that the first 6 months are going to be extremely volatile, and precisely the reason why we are seeing some amount of investment reorganization in terms of their portfolios from mid and large caps to probably mid caps to large caps. And again, one of those reasons why large caps have been performing, and Nifty precisely is the reason why Nifty is performing while the underlying broader market is pretty weak. So that's one of those kind of reasons. Having said that, post 6 months, once the election results are out and the market takes cognizance of that, we do feel that the earnings recovery should be pretty strong, and markets would be taking a cue from that.
Vaibhav, hi, welcome to the show. Any approach toward a couple of these Z group stocks? Now even the likes of Dish TV as well as Z Entertainment. I'm sure you're fielding a lot of client calls on it, but in any case, what would your approach be, and what are you telling them?
And unfortunately, nothing on the stock specific basis, but what we do feel is basically that the whole OTT platform is going under a huge amount of change and disruption with the advent of global players coming into the market as well. So we definitely think that this is an industry which is going to see swift and dynamic changes going forward, and the viewing patterns of the of the viewers also is going to change dramatically. So an industry to closely watch, but it has a potential to change the dynamics of the whole P&Ls as well.
Okay, well, that's on a lot of these media stocks, but the larger theme, Vaibhav, probably playing out is that investors are just shying away from any stock which smells of corporate governance issues or maybe higher amount of pledged shares. Another case in point would be maybe investors becoming really vocal on the CG Power call today as well. Is that an approach that you're taking, that if in case there is a stock which has such kind of negatives, of such kind of concerns, you're probably just selling out from it?
See, as a house, we strongly believe that those companies which take all the stakeholders together, and here we are not only restricting to governance aspect, but we are also saying that along with an environment and a social responsibility as well, we do feel ESG as a theme going forward is going to gain great prominence Having said that, in the recent past, we have seen huge amount of governance issue highlight, and precisely the point where you are seeing that the larger good quality companies are getting even more expensive. My sense is that this trend is likely to continue, where we will see larger pool of capital chasing a very limited set of stocks which are good on governance, and those companies which take all the stakeholders together, thereby actually eliminating some amount of tail risk in the business as well. So we are a strong proponent of this whole ESG thesis which is coming our way.
Okay, just a quick word, Vaibhav, on the NBFC situation. I had a chance yesterday to speak with several of them, and contrary to what gets said on the air, several of them pointed out that the situation remains pretty tough for a lot of, especially the housing finance companies. Is that something that you're also picking up, and do you think it's a seasonal issue, it'll tide over? Or they've kind of hit a wall, and essentially growth is going to slow down quite dramatically for many of them, actually most of them.
Yeah, you are right, Prashant. I think since September, I think it has been tough times for NBFCs, and especially tough times for those guys who are weak in liability franchise. So I don't think that these are the issues which are going to go overnight. And having said that, on March second week when we see advanced tax outflows also happening from the system, liquidity will have to be monitored pretty closely. While the RBI has done their bit by reducing the rates, but what we would love to see is basically liquidity getting surplus on the economy or in the system, which thereby would elevate, or not elevate, but I would say subside some amount of problems for these NBFCs. Till that time, I don't think they are going to chase growth. But one thing is going to be very clear from there, that those guys who are very few, who have high corporate governance, who have high exceptional IT systems and professional management, are the ones who are going to grab huge amount of market share once this turbulence gets over.
Okay. All right, Vaibhav, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the fundamental view coming in on the markets. But the big story is really breaking on your screen with regards to the CAG report on the Rafale deal. And we now have Rituparna Bhuyan, who's joining in with details on that. Ritu, go ahead.
Well, clearly, and as expected, this CAG report has said that the price of the Rafale aircraft negotiated by this government is 2.86% lower than the price at which the UPA government had negotiated for the 126 aircraft MMRCA deal, where the Rafale aircraft was chosen. Now, breakup of this price comparison which has been done according to CAG. While the basic flyaway aircraft, the cost of the NDA and the UPA, that remains the same. There were price improvements as far as the NDA specific deal is concerned. For example, if you consider the India specific enhancement, the CAG says that there was a price benefit of 17.08% as far as the NDA government is concerned. As far as services, product, operational support, etc., there was a price advantage of around 4.77%. Similarly, for weapons package, the NDA deal was 1% cheaper. However, in two categories, that is engineering support and performance-based logistics, the NDA deal was more costlier than the UPA one. But net-net, the message from CAG is that the Rafale aircraft deal negotiated by the UPA government, if you consider the price per aircraft, then there is a net price advantage of 2.86% as far as the NDA deal is concerned compared to the UPA deal. We'll get you more details, still going through the fine print, and shortly we'll be putting out more details on this.
All right, Ritu, thanks very much for that. So, I think people are going to focus on that 2.86%, a cheaper number more than anything else. But as Ritu pointed out, there's more detail to parse over, and we'll continue to put up more as we go along. And we'll get you also reactions on the political side, and it's a big story in this election season. and not going to go away anytime soon.